Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 2nd of November. All right, now we've had some major moves happening across the board here, and there's about 3 or 4 different events which are sort of causing things to move. So you need to focus on where the currencies, where they were. This is why we're looking at the charts at the moment, and where they've got to, and then try and piece together why they are where they are. Okay, I know that sounds a little bit crazy, but that's the way you need to do it. And one important thing I want to explain through this this video is the process of analysis. It needs to be objective. Keep your technicals away from your fundamentals, right? Then you bring the technicals and the fundamentals together. Then if they match up, then there's a trade, because there's a couple of situations here at the moment which we do have a bullish situation, say the Aussie and Kiwi, but it's just a technical sort of sentiment. There's no fundamental aspect to it. And let me explain sort of what's going on. So the Aussie, now let's just have a look at this. Aussie's had a really good session, breaking through sort of 71, sort of 10.15. It's been dancing around there for a little bit. And with the overall US dollar weakness across the board, it's pushed the Kiwi up through 65.80 as well. Dollar yen, as you can see, it's now on the sidelines. When everything's calmish as far as geopolitical situations go, it's a little bit, everyone just squares up and just sits where it is. It is down through the flag, down through the cloud, so we may see some sort of selling during the day, but I don't think the US dollar is actually going down. The big fish here is sterling. Sterling is going up, right? And this is purely on geopolitical situation. Brexit deal, very close. There's an Irish border situation, which apparently is very close as well. Now, actually, on top of that, we did have the Bank of England meeting yesterday. They left everything unchanged. But Bank of England Governor Carney did come out and say, basically, if we get a smooth transition with Brexit, we're going to have to start raising rates very quickly, right? To me, I've been saying that for some time. The fundamental backdrop of sterling is strong, right? But as you can see, it doesn't matter how strong it is. If there's a major geopolitical event, that's the technicals are being pushed down by Brexit. Fundamentally, the economy is strong. So you get Brexit out of the way, or a nice deal, and the fundamentals come into play, sterling could well be back at 135 very quickly. Now, euro, to me, has just come along for the ride. Now, there's no major changes as far as I can see in Europe. There's no rumblings about Italy, about their budget, about Merkel. Yeah, sure, she's not going for re-election, but she's still the chancellor. No major change there. And euro has slightly sort of rallied here as well. Now, to me, I'm still bearish euro, and this is actually potentially a very good opportunity to get short. Dollar CAD is man, I know it's generally called the loonie. That's because of the loony bird. But when I was at the banks, it was the lunatic currency, because it used to get pulled and pushed all over the place, and it's no different to right now. Oil is falling back to $63. Not that you'll see that at the Bowser anytime soon. But and dollar CAD, with that US dollar weakness, has sort of drifted back into the range. To me, it's trading sideways in a big range. And to me, it's too hard to call what the hell is going on in dollar CAD. Right? There's too many different angles. The US dollar angle on the US dollar index, the CAD, oil price falling, strong hawkish Bank of Canada, etc. So there's a lot of different variables here. So when you are looking at what's going down in the currencies, it's always good to come back and reflect what economic numbers came out to see exactly what was in there. Like, check this out. So you got the manufacturing PMI on a normal week. So let me just redraw that so you can see what it is. So the manufacturing PMI out of the UK, weak numbers. Now, if that was there sitting there by itself, sterling comes off 50 points at least, right? And what we did have is the Bank of England. Obviously, the vote count, no change in the vote count, no change in rates. But as I said, the statement and the press conference from Carney was going to be key to this. And as I mentioned, he has called, basically, if we get a smooth Brexit transition, we're going to have to raise rates quickly. So just be prepared for a higher sterling if we do get a Brexit deal. Now, then you come back down into the rest of the numbers. You know, there's a bit of dribble here, but don't worry about these early labour cost numbers, right? The major employment number is the non-farm payrolls, which is today. This is just a weekly number. You go back 3 years ago, this number was completely insignificant. It gets a bit more talk on the airwaves these days, and that's because the media wants something to talk about. One key thing is, though, ISM manufacturing numbers were off the mark, okay? So that's something there to ponder and works in with the weaker US dollar. Probably would have seen a few extra people selling US dollars at that stage. So when we come back to the major currencies, you can sort of see, okay, well, but why is Aussie and Kiwi higher, right? I can see why sterling's higher. So sterling basically closer to a Brexit deal and a hawkish Bank of England, yeah, it goes up. And it broke down, well, it broke up through 128. We hit almost 130.50 now. I tell you what, this is a bit painful. I just missed that opportunity, but we are coming up to more opportunities. Now, so we know what Brexit's doing. I mean, sterling, euros following the general weakness in the US dollar, which is brought on by sterling. Okay, now what's happening with the Aussie and Kiwi? Now, if I come across here, to me, it's a twofold thing. We've had another nice day in the equity markets. Okay, so the whole global growth story, issues about global growth and US trade tariffs, I mean, US-China trade tariffs, all this sort of stuff, has been pushed aside. The equities have pretty much bounced back to where they were, right? So we've had that clean out in the dollar index. This weakness in the US dollar, or the dollar index, okay, don't forget, 70% of the basket is sterling and euro. This is not US dollar weakness, it's sterling strength, right? So don't get confused with what's going on here. Yeah, they've sold some dollars, but it's more on the back of sterling than anything else. The big fish here, so with Aussie and Kiwi, yeah, they are the risk on, risk off currency pairs. What we've seen is the yuan, which was steadily heading towards 7, snapped down through 6.97, touched 6.98. And I was talking about this yesterday, you know, instead of just sitting here, you think, well, there's a lot of room here for it to pretty much come back down to 687. And sure enough, on the day, it dropped 700 points. Now, the thing is, the People's Bank of China, they don't publicise intervention. I heard a couple of Chinese banks saying, oh, the dollar index broke down, and so the dollar yuan broke down. Well, the dollar index is off 60 points, not 700. Okay, so to me, this is a flush out of long positions, probably determined by the People's Bank of China. Now, with this, okay, to understand intervention, this is the fickle part. If you don't have the fundamentals to go with the intervention, what happens is, see this whole move down here, yeah, it's a big move and they've put it back to where it was. It's artificial, right? As soon as the People's Bank of China moves out of the way, it will be back at 698 in a day, right? And this is, we're already starting to see this thing rally. Like, it's not easy to trade here because there's no levels. All you're trading is momentum. So what you need is, we need the economic data. So if we get strong US numbers here, like the US non-farm payrolls, this will be at 698 today. That's as simple as that. So hopefully what we ideally want is, we don't want this thing to move too much today, but I can tell you, a 700-point move, it was massively oversold. You'd expect it to be up around 695 by the time the US non-farm payrolls come out. Now, I'm sort of just speculating that. I can't seriously trade it because where do I get in and where do I get out, right? There's no levels here. If anything, you've got a low here at 691. That's a level that you could probably say, well, if I'm long, I'm getting out if it drops below that. But it's a bit of a high risk trade. I'm just going off what I know and what I've seen over the last 28 years, and that's telling me this thing's going to be at 698 in a heartbeat. All right, so that's where that appreciation in the yuan, right, goes a long way to moving the Aussie and Kiwi higher, right? So that's another big move. So the moves here in the Aussie and Kiwi, to me, are very short term. They've been pushed up there as well by the move in the yuan. And the strength in sterling as well has also dragged them along. So let's just have a look at the picture here, the technical picture. It's quite crazy. And this is what I was saying at the start, you need to be objective about your technicals and your fundamentals. So come into the MyFX Trading Hub, and I'll come up to the data and the market conditions at the moment. Now, some of you may think I'm somewhat crazy, right? You look at the overall snapshot. As I say, it's the fundamentals and technicals put together. To me, right, euro is still bearish. It has not broken down or broken back up. Yeah, sure, it's gone up on the day, but daily and weekly charts are still pointing down, and there's no change in the fundamentals. So to me, euro is still bearish. Sterling, it's sideways. I mean, we've got a hawkish Bank of England, but technically it's all over the place. Yeah, it's up on the day, but still on the weeklies, it's down. So to me, there's no real clear situation here for sterling. once I said, if Brexit comes out with a good deal, well, then this thing will be bullish and will be bullish for some time, I would suspect. So just keep an eye on that. Now, the Antipodeans, the Aussie and the Kiwi, they have shot up on the hourlies and dailies. Aussie also on the weeklies. It's broken through a number of major levels here. But understand these two pairs here are technical trades, it's technical sentiment. And that's what you're going to do. You can't say, well, Aussie and Kiwi shouldn't be up here. Well, technically, you know what? They have broken higher. And I'll show you the charts in a minute. So they are bullish. And then you're saying, well, how can the Aussie and Kiwi be bullish if the US dollar is still bullish? Well, the US dollar index is down on the hourlies, but it's up on the dailies and the weeklies. To me, and fundamentally, it's still strong. We expect the Fed to raise rates in December. So to me, the US dollar is still going up. Okay, the US dollar index. Dollar yen, dollar CAD sideways, and dollar Swiss is just hanging on for dear life to a bullish sentiment. And this is where things may change and be the best pair to look at to manage your trading opportunities, because the Swiss, obviously very neutral, and the dollar is resting on, well, it's just pushing through hourly support, going sideways, but daily and weekly are just right at big levels as well. If it breaks down, well, then that's when I think we'll see the US dollar go into a bearish sentiment. So it's probably the key to it. Keep an eye on dollar Swiss. That's where the action is going to be. Now, just on this, I just want to back up and show you exactly why I think this is the setup that we have, this crazy setup with all these majors. Now, if I just come over here to the technicals, right, here's, let me just show you, well, wrong one. Let me just get on to the euro. I just want to show you a bit of a backdrop where I get my technical perspective from and that overall picture. So you look at the euro, right? So it's just been cruising to the downside. Yeah, we've had a slight rally. It's still overall, you know, heading lower, but at this point in time, it's more sideways than up. And if you're looking at the dailies, it's still going down. We're at a level here, just holding it down. And also on the weeklies, it's also heading lower. It's just retraced back to a resistance line. So to me, overall, euro is still in a bearish picture. If anything, we're getting a better level to sell. You come back to sterling. Now, sterling is, as I said, a very interesting picture. Up on the hourlies, clear as day. Overall on the daily charts, it's still moving lower and it's just snapped back into the range somewhat. But to me, until it breaks sort of around 131 and a bit, that's still heading lower. And you can see, if anything, it's snapped back into the range on the weeklies. It's probably trading sideways. So to me, sterling, where's it going? Well, it's a bit too hard to call. Whereas the Aussie, check this puppy out. And this is what I'm talking about. Just technically, it's broken through a couple of levels here. Obviously, on the hourly chart, it's screamed to the top side. But on the daily chart, it's broken through just below 72, the figure, and the same on the weeklies. This thing here, and it's almost on the monthlies as well, it's snapped back into the range. To me, fundamentally, the Aussie doesn't go up, but technically it is based on these moves. So it's a little bit of a tricky one. And as I said, we need something to push this along. And you're looking for economic data for the best opportunity here. Thank goodness we have Aussie retail sales today. If they're strong and really strong, well, the Aussie gets to shoot to the top side. If it's weak, we may see these currencies snap back into the range. And don't forget, I think the move here, it's part of, a lot of it is the yuan, right? And if that starts to fall, well, we should see the Aussie fall down on the dailies and the hourlies. But it's going to come down to the Aussie retail sales figures today. That's a really good opportunity. You look at the Kiwi, very similar perspective with the Kiwi. Okay, it's a bit clearer on the hourlies up. It's broken through, I think it was 65.80. On the weeklies, it's probably just snapped back into the range, although it has sort of formed a base down here around 64. So a little bit tricky, but very, like sentiment, yep, technically it's bullish from my view on the technicals. So then you come back to look at the dollar index, and this is where I wanted to get to, is actually just give you a quick look at this. So on the hourlies, yeah, down. It's broken down, clear as day, down through 96.80. But on the daily charts, I mean, it broke up through, I think it was about 96 sort of 20. This level is acting as support. Until it's broken, to me, it's still heading to the top side. And the same for the weeklies. This level here, back towards 96, it's still in an uptrend. So to me, it's going up on the dailies and the weeklies, even though it's a short-term blip down on the hourlies. And don't forget, this is sterling strength, euro strength, not US dollar weakness, even though we did have a little bit of weakness in the ISM manufacturing data. Right, so just to sort of give you the full perspective, as you can see here, dollar CAD just trading sideways, dollar yen basically the same. Okay, it's just snapped back into the range. And dollar Swiss, this is the one I was sort of just suggesting. Keep an eye on this pair here. It's usually the sort of the little quiet currency in the corner. It's just trading sideways through a level here at the moment. On the hourlies, that was going up, so a bit of sideways activity now. But you can see here this uptrend on the dailies is right at a technical level, and it's coming back to sort of test that on the weeklies as well. So dollar Swiss may be the key to the next move on the US dollar, right? As opposed to the US dollar index, which is the basket, which is basically a reflection of euro and sterling. If euro and sterling are moving aggressively, the dollar does the opposite. All right, so when you come back to look at the overall picture of your technicals here, okay, now you can get some understanding of what I'm talking about here on the summary, why these currencies have a different picture, right? So these two here, technical setup only. To me, the dollar, it's sort of just whipping away. This has got the best fundamental direction. Euro, it's got to be going down. Brexit obviously causing major trouble there. And that's the tricky situation we've got. The US dollar's not going to go up and the Aussie and Kiwi aren't going to go up. So something's got to give here. So something's got to give. What do we need to really see what's going on? We need some economic numbers. Would be great. And what have we got? We've got the biggest numbers coming out today, US non-farm payrolls. Right, this is going to give us very clear direction on the US dollar and will set the tone for the US dollar for the next week or two. Right, so it's very important we keep an eye on this. Of course, Brexit will have a major impact on the value of the dollar. If there is a deal, yep, sterling keeps going up. That'll put a bit of downward pressure on the US dollar, but it'll be only short term because fundamentally the US dollar does have a strong picture. So, but over for the Asian session now, just get yourself focused for each session here. So the Asian session, the Aussie retail sales figures will be the key to the move. We've got the currencies at some very close levels. And that's important to keep an eye on that. Now, if I just come across, I've actually, as you can see here on the major numbers that I'm looking at, okay, I got the Aussie retail sales and the US and Canadian numbers come out at the same time. I think dollar CAD is in the too hard basket, and with those numbers coming out at the same time, it's too hard to focus on too many different pairs. The US dollar is going to impact all major pairs, so that's where my focus is going to be. But outside of that, if I just bring you across to the economics. So there are some key numbers here coming out in Europe. Now, as I showed you at the start of this video, right, the UK manufacturing PMI, weak numbers, the currency's up 200 points. So forget about UK data at the moment. It is inconsequential. The market doesn't give a toss about UK numbers. It's about Brexit, and that's it. So when you come into the European session, though, there are some numbers you can keep an eye on. So we do have, like, usually the construction PMI numbers out of the UK. Yeah, it would be something to look at. But today, I'm not looking at it because it doesn't really come into play. But we've got some, just down here, some manufacturing numbers out of Germany and Europe. Keep an eye on these, right? This is, Euro, to me, is looking for opportunity to get into a trade. So, and to me, everything's bearish. Well, I'm bearish still on Euro, but we may see some activity here on the Eurozone and German numbers, right? Have a look at that. Then we run straight into the US non-farm payrolls and the Canadian employment numbers. Now, for those traders who are sort of new to the game here on the fundamental aspect of things, now you see a lot of media, you see a lot of articles, everyone writing about, yeah, watch me trade the non-farm payrolls, all this sort of stuff. It's like, yeah, right. Give me a break, man. Trading these numbers like live is extremely hazardous, right? Non-farm payrolls, the key number here is the 190. Let me just get that back up. Okay, 190. There's three different variables. You've got the rate, the payrolls, and then the average earnings, which has been a major focus for the Fed and the Bank of England for that matter. So you're looking at average earnings. You want these numbers to line up with the payrolls number. Right, the market reacts first to the payroll change. If that's stronger than 190, US dollar goes up. If it's weaker, it comes off. Then they'll focus on the average earnings. Then last but not least, they'll have a look at the rate, right? So there's three variables here. Now, to get a really clean trade here, say, for instance, the payrolls number comes out at, say, 220. The rate is 3.6%, and average earnings are up to 3.2%. I would expect the US dollar to rally 100 points, right? But you need all three variables to be strong. If they're not, say they just come out as expected, well, that takes out the extra drive. If one is strong and one is weak, well, then what you'll see is what you usually get on the non-farm payrolls, and that is a currency that shoots up, shoots down, and is pretty much back to where it was. It's a little bit of a hazardous situation. So what you want to do is you want to look at the numbers and then line up your technicals and go, okay, so what have we really got here? Once again, if you're looking at the daily perspective on these currencies, this is where you can actually get a better overview and you take away a bit of the noise. As I said, the Aussie's broken to the top side. Kiwi's broken to the top side. Dollar yen, pretty much sideways, still in a little bit of an uptrend. Euro, still in a downtrend. Sterling, snap back into the range, and dollar CAD into the range as well. So we've got a couple of pairs here where there have been some breaks. So I'm looking at, I'm definitely going to be looking at Euro, Aussie, Kiwi, Sterling. I'm staying away from that. It's just pissing me off at the moment. And dollar CAD, well, you know what, a bit too tricky for me. So they're the pairs I'm looking at today with the numbers. And we do have, as I said, we've got, I'll just bring you back across to the hub. We've got Aussie retail sales numbers, as I mentioned. We've also got the US numbers there as well. So keep an eye on those. But don't forget, the overall backdrop of the situation here is geopolitical, and it's all, well, it's not all sterling. It's not all Brexit. There are a couple of other things sort of simmering away, but it is the major emphasis. It's impacting the value of the dollar, the euro, the correlations, the currency correlations are a bit all over the shop. And that's where you really need to do your homework and come back down here. As I said, this is not a crazy picture. I'm not going crazy. Bullish for the Aussie, Kiwi, and the dollar, right? That doesn't really match up, I know that. So one of these, something's got to give. These puppies, I think, will go down. I think the US dollar keeps going up. Overall, in Asia, the value of the yuan will be important. If dollar yuan starts rallying, Aussie and Kiwi will come off. If the yuan appreciates, they will continue to go higher. And the Aussie retail sales figure will impact the Aussie, and the Kiwi will follow it. And then during that North American session, it's all going to come down to the US non-farm payrolls, and that's going to impact all currency pairs here. All right, it's a pretty big day. I mean, I've gone into a little bit of extra length there to try and explain a few different things, but it's very important you understand that sometimes the picture can be a little bit muddled because you've got, technicals doing one thing, some currencies being moved technically, others being moved fundamentally and technically, and others being moved fundamentally. So this is where real trading comes into play. We've got lots of trading opportunities. You need to work out where the best trade is, right? And that's what I'll be looking at today, is trying to nail that myself. Aussie retail sales figures, with the way the Aussies rallied here, is a really good opportunity. Okay, I'll be watching the yuan, watching the retail sales figures. And if those two things match up, it's game on. All right, guys, that's it from me. Have a good trade day. I'll see you in the live trade zone. Cheerio.